Hey guys, what's up? Alec back with the daily stock market, and look at that. We have Amazon leading the day on Friday, which was our last trading day. We have Tesla that was up 5.7%. Moderna was up 3.8%. Enphase, Apple, Cloudflare, AMD all up. However, we had stocks like Roku and Redbox and Baba down double digits on Friday. And in this video, we're going to go over the top requested stocks that people are asking about. So here are just some of the submissions. As you can see, we had tons and tons of submissions on Instagram. So we're going to do our best to get through as many of these submissions as we possibly can. Make sure you drop a like on this video and share with a friend because you know this is going to be a banger video. Subscribe with post notifications on, and jumping right in the video, the first stock that we have is FaZe Holdings, up 22% on Friday, by the way, and it did peak at around 23% gains. On July 6th, you could have scooped this up under $10 on IPO, and since IPO, it's actually gained around 40%, roaring to around $14 per share. Personally, I don't like to buy IPOs when they're recent. This is a $1.1 billion market cap. It could probably trade around $600 billion market cap. I want to see the EPS come out. I want to see the net income, the revenue, and see some of the value behind the stock before I plunge my money into them. I want to see if they're even a profitable company. Okay, we don't know any of that stuff. And you can even see FaZe Holdings if you don't know who they are. They're more of like a content creator. If you're big on YouTube and watch a lot of YouTubers, you probably know who they are. Okay, they a lifestyle and media brand founded and rooted in gaming and youth culture. Its content development is fueled by social media influencers, creators, and businesses, which are composed of content creators, esports professionals, and celebrities, athletes, and musician collaborations. I know they've done stuff with like Snoop Dogg. The company is headquartered in Los Angeles, and the ticker symbol is FAZE. So this could be an interesting one to watch out, especially if they go under IPO prices. But personally, right now, I have price alerts set around $9 and $10 per share just to revisit them. Not to buy. Those are not buy price alerts, by the way. Just to revisit FaZe Holdings. And I also am waiting for them to report earnings. We can expect their first market earnings report on August 25th, by the way, which will be very interesting to see. A lot of people have been requesting Uber because they report earnings on Tuesday, so keep that in mind. Now, I was going to be doing a put on Uber, but I'm kind of against it right now a little bit just because Uber has a history of surprising us when it comes to their earnings. So if we look at a support and resistance standpoint, we can kind of see that right now. Uber is closer to the resistance, and if it gets closer to like that $25 mark, $24 mark, that will even be more of a dominant resistance at that point, suggesting it could go back to the support. And if we look at the last few earnings, which is represented by that blue E right there, you can actually see that it went down. The last earnings it reported, the last two earnings it went down, the third last one it did go up. And it did go up on the last one before that. It went down on that one. So you can kind of see that the history is kind of unknown for Uber. And we'll go on to read that Uber Technologies is reporting on Tuesday. The company has an impressive earnings surprise history and outperformed the analyst consensus estimate in each of the preceding 4 quarters. The average beat is 128%. Let's see how things are shaping up this earnings season. So we can see that the estimate for Uber Technologies second quarter revenues is pegged at $7.3 billion, indicating 87% year-over-year growth. So definitely don't want to be doing a put if they have a chance at doing 87% year-over-year growth. Okay, as we continue through the article, we can see that revenue is pegged at $3.04 billion, indicating 87.9% surge from a year ago report figure. The analyst estimates for delivery segment revenues is pegged at $2.5 billion, indicating a 32% surge. Higher online order volumes are expected to reflect in Uber's delivery gross bookings to be reported. If we continue to the last paragraph of that article, you'll see, however, high sales and marketing expenses as well as costs associated with paying incentive to drivers due to the business model change in some countries are likely to have hurt Uber's bottom line in the second quarter. Okay, the analysts estimate for the same to be pegged at a loss of 25 cents per share, in the to be reported quarter. So that's extremely important because just because they're indicating 87% growth year over year on revenue, remember the market really cares about the bottom line right now, which is net income. And if Uber reports a negative net income by a lot, they could sink in share price. However, if we scroll down to Uber's EPS for the last 4 quarters consistently, it has been a negative reporting company. So that's not a surprise at this point, and it's actually beat analyst expectations every single time the last 4 quarters in a row. So overall, I'm probably not going to bet against Uber this earnings season. But if they do fall below $20 per share, definitely going to revisit them and do a deep dive to see if they're a value play and a stock that I want to own for long term. So make sure you subscribe with post notifications on so you don't miss that future upload. The next video, we'll do a full earnings update. So if you like the earnings video where I go over Tuesday, Wednesday, Thursday, what to expect on earnings, make sure you drop a comment below, smash a thumbs up, or even send me a comment. But just a little sneak peek here, we can see we have Lucid, Robinhood, CVS, SoFi, PayPal, AMD, Uber, Caterpillar, BP, JetBlue, Marriott, Starbucks, and much, much more reporting, along with Pinterest reporting Monday after the close, and Activision Blizzard. A quick update on Activision Blizzard. They're reporting on Monday, and keep in mind right now they're trading at a steep discount from the Microsoft acquisition price of $95 per share. So it might be worth it to do some research after this video to see if the Microsoft Activision Blizzard acquisition is actually going to commence and go through, which, you know, spoiler alert, I think it will. So once Microsoft acquires Activision Blizzard, the stock could roar around 15 to 20% up to $95 per share at the acquisition. Now, I'm not saying that that's 100% going to happen. There's always risks involved with acquisitions, especially this one. So do your own research. So just to give you some headlines on what's going on, we can see Microsoft Activision deal is likely to win approval. It's in the final stage, how it could cash in. We also see like things saying that the Faces competitive probe, this could do huge impacts on the $200 billion video game industry. So do some of your own research, definitely for sure, before jumping in and taking advantage of that Microsoft acquisition. Here's some other articles that you can read a little bit into if you want to pause it a little bit and read these articles, but we're not going to dive super deep into Activision in this video. So the main reason I wanted to talk about Activision in this video specifically is because they're reporting earnings on Monday, and if they end up dropping to around $60 per share, $65 per share, $70 per share, then I'll be making a deeper dive video on Activision and see if it is the time to buy. So make sure you're subscribed with post notifications on. And if you see Activision Blizzard dropping after hours on Monday, just know that there is going to be a deeper dive video coming out. Now, PYPL, PayPal, and Amazon, I'm going to be doing deeper dives on those later on this week. So make sure you're also subscribed if you want updates on PayPal and AMD. But Baba is the last stock that I want to talk about because they're down 11% on Friday, and everybody wants an update on what's going on, down 22% in the last month. And obviously, the stock has been absolutely devastated, down 71%. You can see that they're an ADR, which Robinhood classifies as represents shares of a non-US based company. Bank issued ADRs to facilitate trading on U.S. exchanges. Some banks require investors to pay periodic service fees, typically, 1 cent to 3 cents per share. So why is that important? Is because the SEC just listed that Alibaba is one of the stocks that is on their list of delisting on the New York Stock Exchange. Now, with that being said, there's other stocks that a lot of people are fond of, like NIO, for example, and Lee and JD.com. So with that being said, if Baba is on the list for the SEC of stocks that are faced to be delisted, just know that a lot of these other companies are probably on the list as well. Also keep in mind, this is not the first time we've been hearing stuff like this about Baba. fears like this about BABA have been going around for a long time. But for the average investor, the risk versus reward probably just isn't worth it for Alibaba at this time. But if the shares keep dropping and dropping, we will be revisiting BABA, because if you look at the net income, they're doing 80 billion in net income, 140 billion in net income. Now in 2022, they've had a hiccup. They're down 75% in their net income, which is a huge red flag, but their total revenue is still higher than it's ever been in 2022 with 853 billion in total revenue. The balance sheet's also looking phenomenal, with very little risk of BABA going bankrupt or out of business anytime soon in the next 3 to 5 years. Additionally, analysts have a 72% upside on BABA for $154 per share in the next 12 months. Keep in mind, most of these were reiterated 21 days ago, 13 days ago, which the news, obviously, that the SEC put it on their delisting list wasn't available then. This news broke around 3 days ago, 4 days ago. And also keep in mind, a lot of these are 1 to 2 star analysts that are weighing their opinions on BABA. Definitely take what analysts are saying with a grain of salt on BABA, and just know and understand the risks if you are a BABA investor. You know, if they end up getting delisted, which is definitely worst case scenario, the stock could drop under $50 per share, and it would and you know, your broker might give you like 30 to 60 to 90 days to sell it before it's locked and becomes delisted. So long-term investors definitely don't want to have to worry about that, especially if you just bought into BABA and then you have to sell for short-term losses or short-term gains. That's never a good thing for long-term investors. So there is a lot of decisions to weigh out right now and a lot of things going on in the stock market. And if you appreciate me being along with the ride for you, smash a thumbs up on this video, share with a friend if you appreciate the content. If you want to join the close friends list and you want to see some success for yourself, on the highlight section, you won't see the green ones. That's for the close friends list people, members only. But you will see success number 5, and that's some of the success that we've been seeing in the close friends list group over the last 2 years. Now over 500 positive testimonials, and now we're doing a lot of option trading during earnings season. So now is a great time to get involved with the close friends list as well. Thank you guys for all the love and support you have been showing on the channel. Leave a big thumbs up, share with a friend, subscribe with post notifications on, and I'll see you guys in the next video. Remember, don't time the market, buy the market. Peace.